Asian markets have weakened over the past 2 months based on speculation that the Chinese economy may be slowing down. Yesterday, this was confirmed. After expanding by 11.9% in the first 3 months of this year, the Chinese economy has slowed to 10.3% expansion, slightly lower than forecasted. Tighter lending restrictions, a slowing housing market and other government measures have been introduced to try and contain inflation, and these do seem to have worked. While the GDP number is slightly weaker than forecasted, it should also be taken in context. 10% expansion is still at a rapid rate and is much higher than most other major economies around the world. Take the US for example, which expanded by only 2.4% in the first 3 months of this year. The continued growth from China should be good news for New Zealand's agricultural exports and should help fuel further demand. China is now our number 2 export destination and does house 17% of the global population. While the Chinese number is still pretty good in context, global markets have taken it a little bit more negatively. The weaker Chinese GDP number, as well as soft US manufacturing data, has seen global markets ease overnight. The Kiwi dollar, after trading higher through the much of Thursday, has again traded slightly higher on Friday morning. It is trading at 72.8 against the US and is over 47p against the pound early on Friday morning. The most recent wool auction has seen some fairly solid interest. Prices were fairly strong despite a stronger New Zealand dollar. Much of the demand for wool over the past few years has been driven out of China, which is now our number 1 export destination. While prices have not been particularly strong over recent years, they have in fact increased over the past season. We aren't forecasting to see rapid increases in prices in the near term. However, considering that global supplies are down, the global economy is starting to improve and there is a desire from wealthy consumers to use sustainable products, this does suggest that the outlook for wool prices should improve down the track.